All right. Are you ready?
I'm ready.
All righty then. Hang on a second. Well, hello. I'm very excited to hey, what did I just do here real quick? Hang on a second. I think I forgot to click on something. There we go. Nope. So basically, I just wanted to give it a hold of you guys real quick. Life's Co-Pilot's very excited. We've got Paula Bergfeld. She is going to be talking to us about a financial option for seniors that most people are not really aware of. They've heard about it. They think they know what it is, but they really don't. And this is a HECM or a HECM for purchase. What the heck is a HECM? Okay, so HECM is a home. Well, I'll let you explain what all that is, but it's basically the vernacular that most people know is reverse mortgage. Okay, and you can do a reverse mortgage on your existing home, or you can do a reverse mortgage to purchase another home, which is something very few people understand. But it doesn't mean that you're poor. It doesn't mean that you need the income. There's a whole lot of reasons to use this financial tool. So, Paula, introduce yourself. Tell us who you are. Tell us who you're with, and tell us what you do and all that kind of good stuff.
Wonderful. Well, thank you. Hello, my name's Paula Bergfeld. I'm a reverse mortgage specialist with Cross Country Mortgage, meaning I live in the reverse mortgage world. I don't do any other type of mortgages other than reverse mortgages. So Jim mentioned what the heck is a HECM? And I love that. I love that statement.
You can have it.
Thank you. I'm gonna say I think I'm gonna keep using that. So HECM, it's the initials HECM, officially stands for the Home Equity Conversion Mortgage. HECM. HECM is, in the reverse world, we use the term HECM quite a bit. So it's wonderful to hear that. So the HECM is the FHA reverse mortgage. In Indiana, it's our option for reverse mortgage is the HECM option. So I've been, in the financial services world for, we'll say, over 30 years, and in the mortgage world for probably at least half of that, and then definitely the last 8 to 10 years focusing specifically on reverse mortgages. If you have heard something about a reverse mortgage in the past, I caution you to be aware of your sources because there's a lot of incorrect information about reverse mortgages in the world. So my caution would be come and ask me the question. Let's have a chat so that you get accurate information. If you think about the yield sign, many years ago, the yield sign was yellow. Nowadays, the yield sign is red because it's new and improved. Similar to the reverse mortgage of 20 years ago is not the same reverse mortgage product that we have today. So I do have a PowerPoint presentation and we have a timeline, but I just wanted to lead with that. What the heck is a HECM?
Well, I will tell you, as far as the, you're talking about the timeline has changed and reverse mortgage has changed and all that kind of stuff. I come from, way back. I was in the building business for 27 years. And so one of the things that I recall was when I first got into it, people were really averse and really afraid of doing a slab because they were thinking of slabs that were built right after World War II, and they were not built past the frost line. They had all kinds of different situations. They had copper plumbing underneath that would rot out, and rust out. So people were afraid of slabs. Well, the slab technology by the 80s was far superior to a crawl space. It changed. Okay. Same thing with like a heat pump. Heat pumps used to just not really work in any climate that had never got cold. Well, they do very, very well now. It's the same kind of a concept. People get this thing in their head. It was once said that if, like, and I'm trying to remember who actually said this. It was actually somebody pretty famous that said it. But if the people were introduced to electricity through an electric chair, they would never have it in their house. It's
Right.
People have this perception and they stick with it forever. And then even though their perception is completely wrong.
Right.
So.
And like you said, things have improved. So I love that information about the slab foundation. That's very good to hear.
So, are you ready? Want to jump into your presentation, your
Yes, let's go
slides?
ahead.
Down on the bottom, you're going to see a thing, a green button that says Share Screen. Once you do that, it'll have your screen up there. You see it?
Yes, I do.
Okay, there you
I still had something else open.
go. Okay.
So the challenges of, I mean, the benefits and challenges of having more than one screen. So
I understand.
so so are you seeing it as a PowerPoint presentation
Right
or?
now, I'm seeing your big screen. Your PowerPoint looks off to the side.
Okay, because I moved it.
I see a make something. There you go. Now you just need to pull it up. So there you go.
There we go.
Perfect.
Sorry for the technical difficulties there. Okay. So we already jumped in a little bit and talked about the HECM, the home equity conversion mortgage. President Reagan actually signed the reverse mortgage program into law in 1989. So reverse mortgages have been around for a long time. Like I mentioned, it's an FHA mortgage, so it is backed, by the Federal Housing Administration. And let me just flip over here. So this is the timeline of the how reverse mortgages have evolved. And the very, very first reverse mortgage was in 1961. And actually it was a football coach's wife that it was a needs-based reverse mortgage, and she was not able financially to afford living in her home. And the coach, the current coach and the team, they were the ones exploring options and helped her continue to live in her home. So it's a wonderful idea. And as the as the program has improved, we really are seeing a lot more changes. 2001 was the year that we started doing reverse mortgage counseling. Everyone who gets a reverse mortgage does reverse mortgage counseling. So there is, I would provide a list of counseling agencies, and it's really good. I consider it's an independent third party confirming that the information that I've shared is accurate, but it's an extra layer of support for our borrowers. In 2009 was when they first HECM for purchase. So the first way to use a reverse mortgage for a new home purchase, and we'll talk about that a little bit more. We have non-borrowing spouse provisions. So if a spouse isn't quite old enough to join the club, so if they're not quite 62, there are new provisions which will protect the spouse, and that's wonderful. And then we also have financial assessment guidelines, and we'll talk about that a little bit more. 2023, and this actually should be updated to 2024. The HECM loan limit now is 1.149 million. So what that means is when we look at your home value, if your home value is over that 1.14 million, we're still starting at 1.14 million when we determine what portion of the value of your home you can use. So that's where that number comes from. So I like to just jump in and talk about maybe things that people have heard, like Jim mentioned, the slab for the home that aren't accurate, and just want to give you accurate information so that if you hear someone sharing, for example, the first one, does the lender own my home? Well, if you are involved in a conversation and that comes up, we're going to give you information so that you know the answer to that. And the answer is the lender does not own your home. I can't shout it enough. The lender does not own your home. So the reverse mortgage is a mortgage, and it's recorded as a mortgage, just like any other mortgage is recorded as a mortgage. So, the homeowner is still the homeowner. They just have a reverse mortgage recorded. They still own their home. They still own their home. Sorry. I hear this frequently, so I'm very passionate about that question. So I also hear I still have a mortgage on my home. Can I still get a reverse mortgage? Yes, you can. We will do calculations. So you need to have a significant amount of equity, but just because you have a reverse mortgage doesn't preclude you from, just because you have an existing mortgage, sorry, doesn't preclude you from getting a reverse mortgage. And the first thing we would do is pay off that current mortgage. So you would not have a monthly mortgage payment. One of the greatest benefits of the reverse mortgage, no monthly mortgage payment. Is a reverse mortgage a last resort option? Is it a needs-based program? Sometimes it is. Sometimes we help people who have a need for the reverse mortgage. Absolutely. But more frequently, we help people who are using a reverse mortgage for a new home purchase, or it's a piece of their retirement planning. So we help people basically all along the financial spectrum. So it's not just a needs-based last resort product. So what about, can the lender evict me? Well, if you think about your current home without a reverse mortgage, you still need to pay your homeowner's insurance. If you have a mortgage, you still need to pay your property taxes, any HOA dues if you have an HOA, and you know what happens if if you don't pay your property taxes. Those consequences are the same whether you have a reverse mortgage or not. So those consequences would be because the taxes weren't paid, not because you had the reverse mortgage. The one thing that's different with the reverse mortgage is that you are required to live in your home as your primary residence. I've heard the cost of a reverse mortgage is incredibly high. Well, there are costs for the reverse mortgage. I will say, as there are costs for everything that we get, there is a cost. Is it expensive? First of all, I will detail item by item what the costs are. Is it expensive? My response would be, what are other options to compare it to? Are we providing some extra monthly resources for you? What are other options for the monthly resources? What if you withdrew, say $100,000 from your retirement account? There would be taxes to pay on that. Can you compare that to the cost of the reverse mortgage? So if you look at it definitely in comparison to options, I don't think that it is expensive. But I would take it a step further, and it's an option where you can use some of your hard-earned equity and still not have a monthly mortgage payment. And the reverse mortgage is the only way to do that.
I think that one of the reasons that people perceive it to be expensive is because it's an FHA loan. And with an FHA loan, your mortgage insurance premium, it comes with every FHA loan.
Right.
But in most loans where you're going to have a monthly payment, it can be stretched out over 12 years. Where here you're going to pay it up front. Now it can come out of the value of your home, but you've got to pay that up front. You're going to pay a mortgage insurance premium, or if it's a commercial loan, you're going to pay a private mortgage insurance. Same exact. It's just government loans have MIP and conventional have PMI. You're still going to pay it, but you're going to pay it up front in reverse. What I try to tell people is that on the MIP, the mortgage insurance premium, which is going to be that's going to be the biggest chunk of your closing costs, because you pay it up front because there is no payment to recoup it.
Right.
And the difference is what that is for is so that you can have a no recourse loan at the end, because the investors are covered in case you're upside down at 30 years from now.
Correct. Absolutely correct. And that upfront MIP definitely can be a shock to see. I will just say that, because we're transparent about the costs. I mean, we show those costs so that we're all aware of what those are.
But you're going to pay it on any loan. It's just you don't notice it as much when it's spread out 12 years.
Agree. Absolutely agree, and I appreciate that point. Yes.
I've been a real estate nerd for a long time, so this,
What about the negative amortization for the reverse mortgage? Absolutely. Interest and that the monthly insurance is charged each month. So the outstanding reverse mortgage loan balance does increase. You can choose to make a payment, not required, not expected, but you can choose to make a payment of any amount at any time. That's not a common thing, but just know that that's an option. And then what if the reverse mortgage balance does exceed the value of your home? So let's say you've lived in your home for, like Jim said, 30 years, and maybe we're in one of those downward real estate cycles, and the reverse mortgage balance is greater than what you can sell your home for. Well, the reverse mortgage is a non-recourse loan, meaning the home itself satisfies paying off the reverse mortgage balance. So neither you nor your heirs nor your estate is liable for any additional monies. That's where the mortgage insurance steps in and takes care of that difference. So there are protections to you from the FHA mortgage insurance. Okay. So sometimes we talk to people who are looking at maybe a home equity line of credit and comparing that to the HECM, which also has a line of credit. And there's just a couple features on this chart that I really want to highlight. The first one, again, you still own your home, so that's true whether you have the traditional HELOC or whether you have a line of credit set up with the HECM. The HELOC, you will have a monthly payment. Remember, on the HECM line of credit, you do not have a monthly payment. You can choose to, but you do not have a monthly payment. On the HECM line of credit, it does grow. So the amount that's available for you to use does have a growth factor, and it grows at 0.5% greater than the current rate on your reverse mortgage. So it can be a significant growth rate for your line of credit. And if you think about getting your line of credit, say when you're in your 60s, with the intent to supplement your retirement income, say in 10 years, you have 10 years of growth on that line of credit. That's substantial when we look at the numbers.
Do you have access to that line of credit even if you exceed your value on the other side?
Yes, so the line of credit is independent of what your home value does. So if your home value should happen to decrease, you still have that line of credit based on the value of your home when you got the reverse mortgage. So yes.
Well, in full disclosure, I did we did a reverse mortgage myself about a year ago, and I've been an advocate of them for a long time, and I'd always told my wife if something happens to me, that's the first thing I want her to do. But I made the decision, looking at the current economic situation and the current political situation. My thought, well, I lived through Jimmy Carter, and so I'm going, this is going to get a lot uglier before it gets better. And so I decided I wanted to get out from under that mortgage payment and not have to worry about that. So we went in and I did a lot of math, and we looked at current interest rates were killing. The idea of going from a 3% to what the current was, I didn't like.
Right.
But with that HELOC growing at a half point above that, I ran the math, and I'm thinking if it stays at the same rate, and if it, because I had a mortgage to get rid of, as well, so I get rid of that payment, which has been wonderful. And then if the rate stays the same as far as the interest rates, because it's higher than normal at the moment. So there's a chance that potentially it could go lower. It could go higher, but I'm going to stay with that, right? And I figured if appreciation or on the house only went at 2%, okay, then for that duration, that I would run out of equity when I was 90.
Okay.
But if I didn't touch the HELOC portion and it kept growing, I'd have like 400,000 there. And so many people, and I'm in, with caring transitions, we help people downsize, we help people, so we're always coming in and helping that senior downsize and senior move and what have you. And we also help declutter people that are wanting to age at home. And then I'm working the senior world, and then Life's Copilot, we work within the senior world, very exclusively. So a lot of people want to age at home, but they're forced out of their home because of property taxes. They're forced out of their home because of maintenance costs or what have you. So with a $400,000 HELOC in my pocket, that could be a savior to make sure that is taken care of. Maybe somebody needs in-home care periodic. Well, that might be a resource for money to do that, to help that age at home, that most people aren't thinking about. They don't realize the fact that this is basically a financial tool as opposed to a quick monthly payment or a quick infuse of cash, which can be, but yeah.
Yes, absolutely. And when you see, like you did, the line of credit growth, it's just, very powerful to see those numbers. We talked about the non-recourse, but I think it's worth mentioning again. You can never owe more for the reverse mortgage than your home itself. The home will satisfy paying off the reverse mortgage balance. But let's flip it around and say that the home value significantly exceeds the reverse mortgage balance. It's in that respect, it has a balance, the reverse mortgage balance. When you sell your home at closing, the reverse mortgage is paid off and you would receive the balance of the proceeds. So it's not, as much as many times it is, funding for the forever home, you still have choices if you decide that, you would like to, sell your home and move somewhere else. And then you still have that equity.
Well, a lot of people talk about that they want to, that they could do a HELOC, that would be, just if they needed money out of their house. Well, the problem is then they got a monthly payment. And if they're getting a Social Security check of $1,500 a month, where's the money coming from for that payment? Where the heck'em, there is no payment.
Correct. And
so.
that's a very realistic example. It absolutely is. But if you think about maybe someone who, they're 62 and better, so they're in the club, they qualify based on their age, but they're still working, but maybe they work in a commission-based occupation. The reverse mortgage is a flexible mortgage. So if they would still like to make a mortgage payment, absolutely they can. Say, commissions next month are really high, select an amount, make a mortgage payment, and next month maybe commissions are down. No requirement to make a mortgage payment. So it's very flexible in that respect too. And I think,
well, on that, I know of a gentleman who has went with a reverse mortgage on a reverse mortgage purchase years ago. Okay, and why he did that? He's first of all, he's very financial savvy. Okay, so he teaches people how to deal with their money. Okay, but he also, what he's doing with it is he goes through, and at 70, some you have to pull money out of your tax deferred retirement programs. So they have to do that. So what he does is he pulls out the minimum for 4 straight years. Then on the 5th year, he pulls out a big chunk, and then he takes that and he pays back the interest on his reverse mortgage for 5 years. So he gets a tax break from that. And then that money then goes into his HELOC or his, home equity line of credit. So he's saving, from what he's told me, he's saved hundreds of thousands of dollars so far doing this. So he's, over a period of time. So he is very astute financially, but people don't realize all the tools you can use with this.
That is a wonderful example. So when he purchased his home with his reverse mortgage, he paid a little bit more and created the line of credit, in the HECM line of credit. So like you mentioned, Jim, every 5 years, he makes a substantial payment for his HECM. And let's say he made a payment, and I'll just say $10,000. When he makes that payment to his HECM, that $10,000 actually goes back into the line of credit, and he has access to that money whenever he wants or needs in the future. So it's a wonderful vehicle, and establishing that line of credit when you make the purchase is a very savvy option. I was trying to think of the best word to describe that, but yes, that I applaud him for doing that and for knowing that if he can pay a little bit more when he purchases his home, he can create that line of credit.
Yep.
Yeah. Okay. Whoops, we went 2 pages. Sorry.
Okay.
So who qualifies? Who qualifies for the HECM? You need to be 62 or better. And if it's a married couple, as long as one of them is 62, then it's possible. I will say, I will put some asterisks beside that. If one of the spouses is under 62, we need to have a discussion because they would be considered the non-borrowing spouse, and there's some limitations. So just want to be aware. And the screen also says 55 is the minimum age for jumbo programs. Unfortunately, in Indiana right now, we do not have any jumbo programs, but I'm licensed in a variety of states. So in other states, we have access to some jumbo products down to age 55. And then what kind of home can we do a reverse mortgage for? Single family residence, absolutely. Condos, definitely we can do condos. They do have to be FHA approved. So we can help with that process, but it is a process. 2 to 4 units, we can do PUDs, townhomes, and some manufactured homes. So a variety of home styles we can help with.
And my builder development hat is coming on now after doing that for 27 years. The difference between a PUD is a planned unit development, which is because what that basically means is that you own the dirt directly under your foundation. That's really what that comes down to. Whereas some of the condos that are stacked becomes challenging, and those are the ones you're not going to get FHA approval on because now I'm drawing a blank on the horizontal property regime as HPR. Okay, so that's where you get into an issue there. I'm sorry I had to jump in there because I wore that hat for 28 years. So
no, that's great information. It really is. And really, who wants to listen to me just keep talking and talking and talking? You're good. Underwriting is a little bit different in the reverse world. So we do look at your credit report. So I'm not looking for a specific score like in what I call the forward world. We do look at they do look at a score, but I'm looking to see, how have you made your payments? Do you have an existing mortgage? Have there been any late payments for that mortgage? Do you have any installment loans, like your car loan? Have there been any late payments? What about your revolving debt? How has your payment history been for those? And then we want to make sure that the reverse mortgage is a good fit for you. So we start with your income and we subtract, the items on your credit report. We would make sure you have enough money for your property charges. So for your homeowner's insurance, your property taxes, any HOA dues, and an estimate of utilities based on the square footage of your home. And then we still want to make sure that you have a residual income based on your household size. So we want to make sure this is a good fit. It's not just, everyone, you apply, you're approved. There actually is an underwriting process because we want to set you up to win with the reverse mortgage. some of the benefits. You can stay in your home as long as you want. And I will say as long as you want, and as long as you continue to pay your homeowner's insurance, your property taxes, any HOA dues, and as long as your home is your primary residence. So you can spend a couple months in a warmer climate, and that's fine, as long as your home with the reverse mortgage is your primary residence.
Is it one day more than the other place?
Yes.
Okay.
Yes, it is. So we can help you improve your cash flow. If you have a current mortgage payment, think about how your monthly budget will change if you do not have that monthly mortgage payment, because typically that's the largest piece in anyone's budget is their mortgage payment. So the reverse mortgage can change your budget substantially. And you can use the proceeds from the reverse mortgage for whatever you would like. There are no restrictions on that. So you don't have to get it approved. If you withdraw, X amount of money from your line of credit, we don't require any approval for what you're going to use the money for. Hopefully you're doing something fun. Let's just go ahead and jump into the next page. Oh, this is me. We don't really need to see the picture of me. So
Well,
have there been any questions?
Don't see any on here, but one of the things I was going to ask, some things that I have been an advocate of for a long time that people are not aware of that you can do. But for instance, you were talking about the fact you could be a snowbird and have a place and what have you. What I've tried to explain to people over the years is, like, say for instance, you have let's say mom and dad live in Chicago, really expensive pricing, but the kids live in Fishers and that's where the grandkids are, or what have you. They want to come down and buy a place close to the grandkids, so they sell the big house in Chicago. They move to the the house in Fishers. They use reverse mortgage purchase, so they only have to use half of the down payment, half the price for the down payment, and they can keep that rest of that money from their proceeds from their house. And maybe they buy a place in Boca where they go and they spend just a day less than half a year. And they can do that, and they're perfectly fine within that particular program because they've not tied up all their cash. They could use it wherever they want. Or maybe it's a different situation. My in-laws, had this program been available when we were needing it for them, well, in fact, it probably was, but we didn't know about it. Let's put it that way. Okay. So I was trying to figure out some way of getting them. They were living in Wabash, Indiana, where the housing prices were like, I think we eventually sold their little 4-bedroom house or 3-bedroom house, I think, for $60,000. And we were needing to move them closer to where we were here around Fishers or Castleton. And there was nothing that was under 120. Well, had we had this available, we could have sold their house, bought something for that amount of money, and they'd have had no payment because we couldn't afford. They were on fixed income. There was no way they could afford the monthly payments for a house, but that would have solved that problem. I had another friend that I recommended this to, and in fact, he was my insurance agent. His mom lived in she had a condo. She absolutely loved it. And she was paying $1,500 a month, and she simply couldn't do it on her Social Security. And so she went into a reverse mortgage on it. She had a little rental property she sold for like $70,000. She was able to put down to cover that part, and then went with a reverse mortgage and eliminated all of her monthly payment of $1,500. And then she bought from her son a long-term care policy that would actually take care of her, and people would come into her condo if she needed it down the road. So she solved all of her problems by doing this. So there's so many different ways to address this.
So she actually can age in place. She has put all the tools in place for her to age in place.
Correct.
And I'm glad you mentioned about purchasing a home, because I didn't even mention anything about that. absolutely, you can use a reverse mortgage for your new home purchase. And I think the best way, like you shared, is just with examples. Say you sell your home and your net proceeds are 300,000. Well, we all know that you can take that 300,000 and purchase a $300,000 home for cash and not have a monthly mortgage payment. Absolutely, you can do that. Or say you buy that same $300,000 home, but you use $200,000 of cash and a reverse mortgage. Purchase the same $300,000 home, keep $100,000 in your account, and you still don't have a monthly mortgage payment.
Exactly.
Let me flip it up a little bit and say maybe the house that you really like is $450,000. So you purchase the $450,000 house with the $300,000 proceeds from the sale of your home and a reverse mortgage. You've purchased the house that you want, your dream house, and you still do not have a monthly mortgage payment. So it can either help you keep more money in your account, or it can help you, buy your ideal home. So just lots of options.
Well, a lot of times people, I specialized in this when I was selling new homes. I really worked predominantly with downsizers, people that were moving out of the 5-bedroom home that the kids grew up in and trying to find that, a smaller home. And even back before we saw the massive inflation we've seen in homes in the last few years, it was always sticker shock because they were moving out of a 5,000 square foot home and moving to a 3,000 square foot home, but they wanted a ranch, and a lot of times they wanted a basement. Well, the most expensive home you can possibly build is a ranch on a basement. Okay. So you got twice the roof cost, you got twice the foundation cost than you do on a 2-story, things like that. So they would come in and they'd have absolute sticker shock because they couldn't, they couldn't believe they were actually going to have to pay more for a smaller house that was new. Well, today, cost of building and the municipalities and what all the rules are, they have priced homes significantly higher than people are aware of. So this is a solution to be able to do the things they want to do without coming out of pocket.
Right. I'm just thinking back to some of my recent closings. So the last closing that I had, the last reverse mortgage that I helped my borrowers with, they used the proceeds from the reverse mortgage to purchase, and in this case, so it was a down payment, a significant down payment for the purchase of their daughter's home. Wonderful way for them to help their daughter purchase a new home.
Well, there's like I said, there's so many different ways you can address these things. So, and if somebody needs, we have completely avoided this conversation, but what most people think of for reverse mortgages is that income stream that can come in from it. That is definitely a possibility. It's just there's just so many other ways of dealing with it. That's not the only possibility, but that's what most people think about. But it still exists.
Absolutely. We can set up so there's a monthly disbursement, to the borrower, deposited directly into their account. We absolutely can do that. That's an option. And we also really haven't talked much about the need-based consumer, because we help people tremendously, regardless of whether it's a need-based or, we're helping them purchase a home for their daughter. I helped a client who had a significant amount of equity, and she was facing foreclosure because she hadn't paid her property taxes for a little while. We used the reverse mortgage, paid her back property taxes. She had a very small current mortgage. We paid off her traditional mortgage, set up the reverse mortgage for her. And like I said, she did have quite a bit of equity, and she had access to a line of credit. And she's no longer facing foreclosure. So, what a tremendous way to help her.
I had a gentleman that with Caring Transitions, I went in, and when we were doing our initial interview to find out about, he was wanting to do a estate sale, like online auction, and he was going to move, and he lived in a really cute, very, very nice 2-bedroom condo with a big glassed-in porch and all that kind of stuff in Fishers. And he'd been estranged from family. and he, my guess was he was depressed because of the loss of his wife. I'm not a clinical psychologist, so I can't tell you that, but that's with all he was telling me, that's kind of what I'm thinking happened. He was being taken advantage of by people he'd met, people that were kind of like hanger on cousins or nephews or what have you. And they basically cleaned out of his assets. And he had not been able to pay his HOA fees for quite some time, and he was behind on his taxes, and he was getting ready to be foreclosed on, and he was getting ready to leave, and he was moving to a old mobile home someplace. And I'm sitting there talking to him, and I'm like, is this what you want to do? You know, I mean, what's, let's, is this your goal to get to this other place? He goes, no, I don't want to move at all. And I go, we started figuring some things out, and I'm going, do you owe money on the house? He goes, no, and I'm going, you've got other solutions. So I got him hooked up with a reverse mortgage specialist, and we got him out of that mess.
Well, and you mentioned, loss of spouse. If you think about it, not only is it, the emotional loss of the spouse, there's also the financial impact that can have.
Right.
And if the reverse mortgage, especially if it's already set up, they've already qualified, that line of credit is available, that can help offset some of that, financial difficulties when there's only one income for the family.
And the thing to keep in mind on that one income, especially when you're looking at someone that's older, it's the way Social Security works. If you've got two spouses that are receiving Social Security, they're both getting it. You lose a spouse, and they take the higher income of the two spouses. And if it's like, say for instance, if the woman was the higher income and has the bigger Social Security, then she gets to keep it. But if the husband does and he passes, she doesn't get her lower one anymore. She gets half of what his was. Okay, so in either way you look at it, the income is going to drop dramatically.
Right, and it's not that she would get his higher amount. No,
no, she does not.
Right, that's a real change for their financial budget.
Yeah, so the bottom line is this could be a lifesaver, in that circumstance, so, which is why I always tell my wife, if something happens to me, you get the one-time infusion of a insurance check, but I go get on this to eliminate the payment and to create a potential passive income.
True. Because I think sometimes we don't realize that. I mean, you're in the grieving process, with the loss of spouse, and then, oh no, what about the loss of income?
Right. So these are things that, like I said, with like Life Copilot and with Caring Transitions, we're dealing. That's all I deal with is seniors that are downsizing, and I'm often dealing with the aftermath of losing one or the other.
Yeah, that is a challenging time. It absolutely is.
Yeah. So it's one of those things that by doing what I do, I can't hide from it. I see it every day.
Yes.
Yeah.
And I see a variety every day. And I think you see a different part of my world every day. Yes.
Right. Well, so like I said, this is one reason we're having this conversation today. I wanted to get this video out to people so they can learn the fact that there is solutions out there. This is not some scary thing that people have perceived it to be. It's a great resource. And then today I had a conversation. I was at the Marion County Council on Aging meeting today, and I mentioned that we were having this presentation today. And I had several people come up to me that wanted to know more about it because, mom's this or what, different situations with their own family. And what one of the concerns that comes up is, well, I want to inherit this house, my kid does or whatever. Well, first of all, most of the kids, I've come from, 40 years in the real estate business, and I've come from the senior world. Most kids really don't want to inherit your house. They want the money out of the house. They don't want and whatever. That's where that is. But second of all, If they do want to inherit it, if that is a big important thing to them, I always one of my caveats, I'm going to say that 70% of seniors end up in a um, uh, senior living, assisted living, nursing home at some point through their process. And if you're paying out 10 grand a month for one of those, there's not usually a lot of equity left anyway. But but let's just say that they don't. But if they want to inherit it, the the person, the family member can buy it.
Right.
I think in the appraisal like 95%, and then you just pay back the loan.
Right. So the heirs can purchase the home for either the reverse mortgage balance or 95% of the appraised value, whichever. So yeah, so the heirs do have options, because the reverse mortgage would be due at the time when, you know, the borrower is no longer living in the home.
Right.
So then the heirs would decide, do we want to sell the home or do we want to keep the home? And if they sell the home, you know, absolutely, you know, sell the home at closing, the reverse mortgage balance is paid off and they receive the balance of the proceeds.
It's just an FHA loan. So you're just going to take out, like if you had an FHA on your other house, you pay that balance back and you pay whatever closing costs are involved and whatever sales process, if you have a realtor involved, and then the rest of it goes back to you. Same old,
Absolutely.
same old.
Absolutely. I like that. Same old, same old.
Yeah. Nothing new, nothing
Well,
magical. You know?
it's just that comfort in that it's the same process as if there were like a traditional FHA mortgage on the home.
Yeah,
That
but I
process.
will say this: the difference, the big difference is this. I've been in real estate since 1983. Okay, so I have seen the times where you go to closing and the seller has to pay
Right.
because they're upside down. So I've seen those moments. I've seen them in like 2008, 9. I saw them back in the early 90s. I saw them back in early 80s. So those things have happened throughout history. Not they're an anomaly, but they have happened.
Yeah.
With this, if it were to happen again and you're upside down, the beautiful thing is if you have a traditional loan, you're going to write a check at the end to get out if you're the seller. If it is, or you're going to be foreclosed, one of the two. If that's the case, you're upside down and you're the heir or you're the individual, you just hand the keys to the bank and say thanks very much.
Right.
Because
And
there's
you
no
owe
recourse.
absolutely no recourse,
Mhm.
which is wonderful protection for
And it
the
doesn't go against your credit, it doesn't go against anything.
correct.
Yeah.
So the reverse mortgage, because there's not a payment expected, it doesn't report to the credit bureau.
Right.
Yeah.
So, well, to me, there's like win-win-win. It's not for everyone, but it is. I would say if you're over 62 and you're making a move to another house, if you don't at least look at this, you're out of your mind. It may not be the answer for you, but at least you should have the information of what it means.
I would agree. And I agree, it's not for everyone, but at least have the conversation. If you're over 62, looking to move to a new home, or even, you know, staying in your current home, at least have the conversation. You know, I feel like I'm, you know, pretty approachable and it's not like a high pressure. I'm happy to, you know, answer questions and, you know, let you know how your specific situation would look in a reverse mortgage. So here's my plug. Can I share my phone number real quick?
Absolutely, please.
Okay, so again, my name's Paula Bergfeld. My phone number is 317-289-3220. I'm always happy to answer questions, share accurate information about reverse mortgages. What the
Well,
heck
thank
is a heck'em, Jim? I'm stealing it.
well, I will put your contact information on this video as well. I'll
Okay.
send you a copy of it. Do with it as you please. It will
Okay.
be on, of course, this live presentation will be on Facebook on our Life's Copilot book, our page. It'll also eventually the video will be on there as well, and then the video will be in Life's Copilot under our resources under the video library, and so this will be out there for people to see. So thank you so much for coming and sharing with us.
My pleasure. My pleasure. Always happy to talk about reverse mortgages.
All righty, I'll talk to you later. Thank you so much.
Okay. Bye-bye.
Bye bye.